Hi everyone, I'm Kathy Lead with BK Forex. A few times a week, our members will ask me how I set up my watch list for trading because they know how important it is to selecting the best trades of the day. This past week, we made more than 250 in just 36 hours by having our finger on the pulse of the market. And the watch list plays a very big role in this because it helps me understand in seconds which way the market is leaning so I can deliver fast and accurate trades to our members. So, how do I create my watch list? First, I use TradingView. TradingView is a very popular software. The free basic version allows you to create and save one watch list. And for some people, that may be enough. I have the premium version, which isn't necessary for most people, but the pro version, which costs only $14.95 a month, allows you to save a lot of your settings, which can be very valuable. I receive no benefit for talking up TradingView. It's just such a valuable resource. And in fact, once a year, they do a phenomenal Black Friday deal. And I usually wait for that time of the year to lock in my full subscription. And I encourage you to do the same. So now let's talk about what should be on the watch list. So this is my TradingView chart with my zip indicator on the left. I usually like a 4-panel view where I can see a couple of different instruments at the same time. And at the very top of my watch list, you will see that there are a few things here. YM1 exclamation mark, which are the Dow futures, oil futures, and 10-year treasury yields. Since I trade the early New York Open and the Asia Open, I watch Dow futures very closely because by that time the Dow itself has been closed. So whatever Dow futures is doing is essentially, what is going to happen or what the market thinks is going to happen in the next trading cycle. So the Dow Jones Industrial Average futures, that instrument and contract that I like to use is YM1 exclamation mark. So that's what you see here. If I maximize this is YM1 exclamation mark. And what I look for is the change. And if you take a look at this, can tell you right now that Dow futures are down 150 points. It's pretty much where the Dow is because the US stock market is open when we're doing this recording, but that's the way to interpret it. Below that is the Dow Jones Industrial Average itself, then oil futures contracts, the 10-year US Treasury yields, and you can copy these symbols for your own watch list. The German 10-year yields, as well as the Canadian 10-year yields. So I like to watch those very closely. And lastly, I have gold because we look for gold zip trade signals like this one as well. But that is less predictive of currency movements. It's just a signal itself than, for example, stock futures, oil futures, and bond yields. So the question is, how do I use this information to trade? The first thing I do every day is to look at whether Dow futures are up or down. Usually I'm looking for a 70-point move up or down. I'll click on this and I will see whether it's a continuation move or a rebound after being down even more. So, for example, let's say at 6 a.m. this morning, I wake up and I see Dow futures are down pretty much 150 points where it is now, because that's where you see this candle. And I see it coming from a extended sell-off. So it's indicating that the market is risk averse. Investors are nervous. We're in a risk off mode. And it's not as if we're bouncing after having sold off quite a bit. So I'll check to make sure that this in this case is a continuation move and not a rebound move. And looking at stock futures will tell me whether the market is risk on, risk off. When it's risk on, that is when Dow futures are up. I'll be looking for opportunities to sell US dollars and buy yen pairs and Swiss pairs. Let me write this here so you can see it as we speak. So if Dow futures are up, you will be looking to sell. I will be looking to sell US dollars, buy if Dow futures are up, I'm looking to sell US dollars and buy yen pairs and buy Swiss pairs. So, for example, I'll be looking to sell the US dollar and buy euro, or buy yen pairs like euro yen, Aussie Swiss, Kiwi Swiss, for example. Basically, risk on trades. When Dow futures are down, that means the market is nervous. Risk off, which is what we had this morning. So we'll be looking to buy the US dollar for a safe haven bid, sell yen pairs. So this is not selling the Japanese yen itself, but the yen pairs, and selling Swiss pairs. Sometimes there's other factors at play that do not make this a perfect match, but that's basically the rule of thumb that you want to use. So when stock futures are down a lot, I'll be leaning towards buying US dollars, selling yen pairs, and selling Swiss pairs. Since my New York Open trades kick off at 6 a.m. New York time, you can see that this morning we looked at how Dow futures were down quite a bit going to the New York Open. At the New York Open, Dow futures were down about 150 points. So that told me that I should be looking to buy US dollars, sell yen pairs, sell Swiss pairs. So one great opportunity was in dollar CAD. We actually had a dollar CAD zip buy signal form right at the New York Open, which is exactly what I want to see, which is that technicals and sentiment was on the side. We see that US Treasury yields were up, stock futures are down. So US Treasury yields being up is positive for the dollar. Stock futures being down, or stocks being down in general, is negative for the Canadian dollar or risky currencies like the Canadian dollar. And we have a zip buy signal. So dollar CAD moved very nicely for a quick and easy North American trade. We saw similarly profitable moves selling risk the same day in Kiwi Swiss, for example. So we did have zip sell signals, but I come to the markets at 6 a.m. New York time. That was a European session signal, and I do have a YouTube video. If you look through the channel on how to capture European trades, these European zip signals are quite powerful. But anyhow, we come in here. Stock futures are down. So even if you don't have zip, you know that stock futures are down, and so that should be negative for risk currencies like Kiwi Swiss. Overnight, the Reserve Bank of New Zealand raised interest rates by 50 basis points, but they also warned about the pace of growth going forward. And so that caused Kiwi to sell off after the RBNZ rate decision. So with that, happening during Asia, with Dow futures being down quite a bit, this became a very logical trade as well, selling Kiwi Swiss for a move lower. And we also had Aussie yen off of the very weak wage price index. This one did not extend as much. We had the zip sell signal here, got all the way down 9360, but it's a small move. That is why sometimes we have a more conservative first target, because we take advantage when it's a small move like Aussie yen and when it's a big move like dollar CAD or Kiwi Swiss. I also check yields before I place my trades, the 10-year yields in particular for the US. If yields are up sharply, I want to avoid selling US dollars and focus on buying it. Sometimes I'll have a setup that tells me to buy euro dollar, for example, when yields are up. The smartest move in that case is to skip the trade, because when yields are up, and we're talking about 0.8% or more, it signals dollar strength into the New York or Asia trading sessions. In this case, the best trades are the ones supported by rising yields like long dollar yen or short Aussie dollar. So that's exactly what we had this morning, where we had yields up quite a bit, and dollar yen throughout the New York session just gradually trended higher. As you can see, yields trended higher. So these are very, very important instruments to watch so that you can gauge the sentiment of the market and use the watch list to your advantage in helping you identify the highest probability trades. Oil is very important when I am trading dollar CAD. I love it when the move in oil is greater than 1.5%, because that can be very predictive of Canadian dollar movements at the start of the New York or Asia sessions. All of this interpretation is done in a minute or two max, because I'm looking at how stocks are doing, where yields are, and how oil is moving. And then I will check the economic calendar to see what data has been released and how it could impact the trade. For example, we're recording this on Wednesday, and the evening before, Australia's wage price index was very, very weak, leading the Australian dollar to fall sharply at the New York Open. With Dow futures also down more than 100 points, Aussie Swiss became a very obvious and attractive short trade, as you can see in this chart here. Having a properly set up watch list is essential to identifying good trades, because it frames your thinking for the day. It helps you understand what the general market sentiment is and where to find the highest probability opportunities. If you want to achieve results like I have, for example, 250 pips in 36 hours, capturing zip trades like this Euro Yen here, this CAD Swiss, and this dollar CAD trade this past week, you need to have sentiment, fundamentals, and technicals on your side. And if you want to learn how to do this every day and how to trade zip every day, there's no better way than to trade with me. Use my special YouTube discount link under this video to give zip a try.